Fascinating. Culturally, there's a shift in America as well, led by Mary Barra at General Motors. From where you sit, how do you perceive the effort of General Motors, Ford, and the other in America to catch up with you on electric vehicle engineering?
The whole auto industry is in a major transformation as we speak. And ultimately, we will go to a world with zero-emission mobility. That is what we at Daimler has committed to through our Ambition 2039. More than 10 years ahead of the Paris Climate Agreement, we want to go CO2 neutral, not just with the product, but across the whole value chain. And we observe old and new competitors moving in the same direction.
What is the technical constraint? I remember over 10 years ago at the Detroit Auto Show, staring in awe at what you were doing in powertrain, and it was a nascent part of green. What is the industry and Daimler's constraint forward to get this done?
There has been a massive development on the technological side. Much better energy density on the battery cells, more efficient powertrains, so that now we're on the verge of having mass electric mobility possible, and that's where we're making our bets as Mercedes-Benz and investing from 2025 forward in our new vehicle architectures going electric only. For the whole market to transfer into a zero-emission electric-only scenario, what needs to go hand in hand with this effort on the product side is infrastructure. We as an industry are investing in that as well, but this is a bigger one where across industries need to work with each other and governments to make commitments to build up an infrastructure everywhere for electric mobility. That's the one thing that is going to also decide the pace of this transformation.
In an interview last year, Ola, you said that in the next 10 years, you expect the biggest growth for your company to be in China. Has that changed given some of the COVID policies, given some of the infrastructure challenges that the country faces as it tries to curb some of the leverage and spending?
COVID has been a stress test for the whole industry and supply chains, as we mentioned before. But we are very clear in our belief that China, in terms of market growth in this decade, represents the biggest absolute growth potential. That does not mean that we're not going to focus on the other markets that we have, North America, Europe, and so on, Japan, Korea, and other important markets for us. For luxury mobility, especially sustainable luxury mobility, we see promising growth potential in this decade, but we have to go through this transformation at the same time. So the forefront of our investment effort is to put in our capital into new innovative technologies, turn the powertrain CO2 neutral, and at the same time build up software architectures, the car as a service, subscription models, tapping into new revenue pools that we haven't had before.
Ola, just quickly, I heard from my good friend and colleague Matthew Miller. He wants to know how long the waiting list is for the electric G-Wagon. Do we know?
We announced the electric G-Wagon at the Munich Auto Show, and I was overwhelmed with messages from friends and fans of the Mercedes brand. Everybody loves it, they want it. We're going to launch it in the first half of 2024. You better sign up early because the line is going to be pretty long, I guess.
I'm sure Matt's already done that. Ola, thank you, sir. Great to catch up. Ola Källenius there, the CEO.
Hi, John. I'm sorry, John. I can see him.
I can see Matt in the electric G-Wagon. Can't you see him going around with that one, Lisa? Doesn't he have one already?
Yeah.
I thought he has one in Berlin.
You think an electric one?
No.
He likes the guzzling.
One. That's not
That's that specific thing. Honestly, John, you asked a great question, the idea of the supply chain disruptions and how it's affecting them, and the response being we expect them to abate. However, I do wonder how long it is going to take, because we hear different things from all of the auto manufacturers, with some saying it looks like it's going to persist well into next year.
As we know, for these auto manufacturers, Lisa, they've had a supply problem, not a demand problem. Demand's been great, and the stock's been tremendous too. Daimler's up by more than 50% year to date. That's quite a run.
I passed an auto dealer there were no cars.
Nothing there whatsoever.
Maybe 3 in an entire lot.
Amazing. Futures this morning up 2 on the S&P, advancing 0.04% on the S&P 500. 8-day winning streak. On radio, on TV for our audience worldwide. Fantastic lineup this morning discussing the leadership of the Federal Reserve. Who's next as the Fed chair?
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating, I am no Sinophobe, very far from it. I think.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of. Look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we're seeing during this period of time is that communicating via video is not...
Hello traders, how are you doing today? As you can see, we hold quite a few positions on several pairs, and right now I'm going to place a stop for euro at 115.83.3. okay, it will be just right here. So if it will move to this level, I will fill this order and then I will try to open at the lower level. As you can see from our position ticker, we hold position on euro against United States dollar long position at 115.733. okay, so I will adjust. I'll show you. We hold this for about a week. So right now it's time to sell 73.3. It's time to sell this position if it will move lower. Okay, guys. Stay safe. I'll speak to you later.
Of what we've seen in the equity market and elsewhere more broadly. I want to finish on this, though, is the economic data, and this is a factor that I think is underappreciated in America. This is the surprise index, for the City Surprise Index for American data, the American economy, US economic data, Tom, and we've just started to turn positive. That means we're starting to see positive economic surprises in America again, in a better way, and I think that's important, Tom, on both payrolls and the ISM. The data over the last week has been pretty impressive. On the data front, it's PPI today and TK CPI tomorrow.
And the fact is, we become overcome by events, which means you need a supple leader of the Federal Reserve System. The General Electric Company will split. This was announced moments ago. We'll be doing much more on this through the day with our wonderful industrial team. But the headline is simply jaw-dropping for those that used to drive by General Electric in Schenectady, New York, on the New York State Thruway. GE plans to form 3 public companies focused on growth. We'll have much more on this, but it shows the innovation of the American economy and who will lead the Fed in the coming years. We are thrilled that Claudia Sahm joins us today, Bloomberg opinion columnist, but really one of the most articulate voices in what I'm going to call the social policy of the Fed. Claudia Sahm, should we pick a Fed chairman based on politics and social belief?
So absolutely not. But the reality is the Federal Reserve is in Washington, D.C., and it is impossible to escape politics. And all of those positions, and Biden's now got 5, he's get to a point, these are political appointees. So I firmly disagree with people who have been advocating for Biden to have his chair, like knocking Powell out just because he was a registered Republican and Trump put him in place. But, I mean, you know, if Biden wants to do that, that is his choice.
What is so interesting, Claudia, is if you look at the Wikipedia for both Powell and Brainerd, it is absolutely stunning the different path from Wesleyan College, or Wesleyan University, I should say, and Princeton University. Have you ever seen a separation of 2 candidates as we see now?
I'm not sure about that. I think that because Greenspan was there so long, what I have been adamant about is that Powell and Brainerd are an amazing team. Like together, they do so much more. And I think this could very well be because they come at it from different backgrounds. Powell has looked to Brainerd for a lot of intellectual leadership. I think they would be a really knock it out of the park. Powell is chair, Lael is vice chair. That's often a chair in waiting position. I think the Fed is navigating the most difficult period in its history since the Volcker era, and you absolutely need the best people in all 5 of those appointed positions.
Claudia, one of the differences that people have pointed to between Lael Brainerd as well as Jay Powell is that Lael Brainerd might be willing to look past inflation and actually increase the target a bit more to allow inflation to run at perhaps a more persistent 3% rather than a 2%. Do you agree with that assessment of her view and the potential for that to really shift Fed policy?
So I think Jay is as committed to the new framework, which importantly, and we're going to talk about it a lot more this year, has broad-based and inclusive employment. I truly believe Jay is the real deal on that. Lael absolutely is. And I don't think we have a choice. Now, whether we're moving toward a 3% target, that's a completely different discussion. And neither of them is going to, I don't think they're going to need to go there. Right. But I think either of them will do what it takes and are committed to really elevating on par the maximum employment mandate. And that is really exciting. This is not the Fed of even a few years ago.
Claudia, we have to leave it there. Too short a visit. We look forward to speaking to you seriously in the coming days. Claudia Sahm of the Jane Family Institute here is front and center, a changing of the guard at the Fed. We'll see where that goes with Powell and Brainerd. Glasgow has been more than interesting, a lot of what we expected and some surprises along the way, but no one is surprised that immediately following Glasgow and what we do about energy, the debate is, well, in Scotland. If you move from Glasgow and you go west of Edinburgh up the shore of Aberdeen, and then you go north to the Shetland Islands, there is an oil field. The First Minister of Scotland joins us this morning. Minister, thank you so much for joining Bloomberg. This is an oil field, and I guess the decisions in Westminster in that. Where is the common ground on energy that you share now with the Prime Minister of the United Kingdom?
Well, I think the common ground is that we are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives. But the world and the planet demands that we accelerate that transition away from oil and gas and fossil fuels generally.
First Minister, we had a conversation with the Secretary of Energy of the United States the other day, and her fallback position was that oil is a world price, and that here you are with Shell saying that if you develop this field, it will allow for direct investment in energy savings in the decades ahead, in climate change advantages in the decades ahead. Can you contain the benefit of these wells to make wind farms in the Shetland Islands and so much more?
Look, Scotland has enjoyed the benefits of oil and gas now for 40, 50 years. Some would say we haven't enjoyed the economic benefits of that sufficiently, but that's another matter. But we have vast potential in renewable energy. Our challenge now is to develop the renewable and low carbon sources of energy so that we can accelerate the move away from fossil fuels, because we see from the International Energy Agency and other very respected voices that the challenge of limiting global warming, the challenge, frankly, of saving the planet, means that we cannot simply go on and on and on extracting oil and gas forever. Now, for any government, it's not as simple as flicking a switch. There are careful transitions that need to be done, and that is an energy transition. We need to make sure that as we wind down dependence on oil and gas, we are increasing our reliance on the alternatives, and also moving the people who currently work in oil and gas into alternative jobs as well. So it's complicated, nobody denies that, and we need to get that transition right. But we're here in Glasgow in the midst of COP26. The warnings about the future, or perhaps lack of a sustainable future for the planet, if governments across the world do not act to limit global warming, are stark and simply cannot be ignored.
First Minister, have you voiced an opinion on the Cambo oil field that I believe Tom is referring to?
Yes, I have.
What is that?
And what I've said is quite clear, that just before I tell, let me just explain for your viewers the background here. The Cambo development already has a license. It's had a license for about 20 years. It now has to go through a process of permission to develop that field. And I have said it should not be given that permission unless there is a very rigorous climate assessment done. That's currently not the plan of the UK government, and I'm pressing them to do that. Now, there are many voices who would say no new oil field would ever pass a stringent climate assessment, but at the very least, it should be subjected to that test, because the plan right now to simply give it a green light without that climate assessment is not, in my view, consistent with our objectives to meet the aims of the Paris Agreement.
So you are concerned about the means, the end to getting to a greener future. We've heard very confusing rhetoric out of COP26 and heading into this confab. You said you hope that a century from now, people would look back and describe Glasgow as the place which really took the correct fork in the road for our planet. Looking back on what's happened, do you think that we can really say that?
Well, I don't know yet, and we won't know until this COP26 summit concludes, hopefully on Friday. But yes, I do hope, not just for Glasgow's reputation, although that would be nice. Glasgow is often described as the birthplace of the Industrial Revolution. It would be nice if future generations look back on Glasgow as you say, the point in history where the world took the correct fork in the road and managed to avert climate catastrophe. Are we going to get there? There's a lot of work to be done over the next few days. I think there was, over the course of last week, an increasing degree of tentative optimism about the potential outcome of this summit, but that has not yet been delivered. What do we need to see on Friday? We need to see action, real action, that keeps this objective of keeping global warming to 1.5 degrees alive, and that means near-term commitments that will halve global emissions by the end of this decade. It's not called a decisive decade for nothing. And secondly, we need to see the commitments made more than a decade ago to fair climate financing, so that the developed world starts to repay its debt to the developing world, which is experiencing the impacts of climate change and, of course, have done so little to cause the problem. So these are key tests of success, and I really hope that we get there, but I don't underestimate the amount of work that negotiators have to do over these next few days.
Nicola, I think this is the first time we've spoken and not talked about Brexit. I think that's a success for us both. Doesn't that feel good? Feels good for me anyway. First Minister, thanks for being with us. Nicola Sturgeon there, out of Glasgow. TK, that's the first time for me. Feels good.
It is.
Talking about
really,
something different
really
with
well
the First
said,
Minister
John.
of Scotland, Tom.
I mean, it's just time marching on as well. I find it, John, the irony here is just unbelievable. Glasgow, and then the first big debate is an oil field essentially in the backyard.
I know. And it's the same way for a lot of governments around the world right now. Tom, this news on GE, do you want to run through it? GE Aviation, GE Healthcare, and the combined GE Renewable Energy, GE Power, GE Digital Business to become 3 industry-leading global investment-grade public companies. We've been waiting for this one, Tom.
We've been waiting for this, but there it is, and it's still, for those of a certain vintage, an absolute shock. And I don't mean, to be romantic about Jack Welch in Pittsfield, Massachusetts, but John, this is textbook Lawrence Culp. Larry Culp at Danaher was a tour de force, and what he's done here is spin them off. GE will be GE Aviation with 2 other spinoffs. Down the road, Mr. Culp will be the chairman of GE Aviation. And what he looks for here is domain knowledge and domain excellence. It's a new world for Generous Electric.
120 on the stock. We're up by more than 10% in pre-market trading. From New York City this morning, good morning. Tom Keane, Lisa Abramovich and Jonathan Ferro. Your equity market futures unchanged after an 8-day winning streak on the S&P. This is Bloomberg.
Television and radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference, this week on Bloomberg Television and Radio.
Engine number 1 was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that as either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We
founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is, is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
So do you enjoy being a senator with all this pressure on you? Is this fun or is it not that much fun?
My dad always said, if you can say no with a tear in your eye, you might be okay. And I've been crying a lot lately.
Do you see Deutsche Bank ready to pay more and pay out more in terms of bonuses too for staff to have that strong talent that I'm sure you want?
Well, look, it's a war for talent. It has been, in other cycles before. It is now. We're finding that we're competitive in that war for talent.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Viruses can adapt and can actually escape from some of these antiviral treatments. So, what looks good in one clinical trial now might not look good a year from now as the virus mutates. It's actually, in some respects, easier to mutate away from a pill than from a vaccine. I would not take my foot off the accelerator for vaccination efforts.
Dr. Joshua Sharfstein there of Johns Hopkins Bloomberg School of Public Health. From New York City this morning, good morning. Tom Keene, Lisa Bramett and Jonathan Ferro. Your equity market unchanged on the S&P, 8-day winning streak on the S&P 500. Longest daily winning streak of the year so far. Yields come in 3 basis points. A big debate about who the next Fed chair will be. 145.67 on 10s this morning. Outside of that on crude, 82.29, advancing about 40 cents, up by 0.4%. Your stock mover of the hour, there's only one name out there in the pre-market. It's GE. GE splitting into three and ending the conglomerate for good, up by 10.9% in the pre-market, Tom. GE through 120.
It's amazing to go back 6 years to the peak of employment. I'm going to call it 330,000 jobs, John, much larger than some of our larger banks, and of course a global platform, a financial platform as well. And from 330,000 down to 170-ish thousand right now. Really, John, you wonder where that will be in 5 years, 10 years.
And what this company's going to look like in 5-10 years. The years of Jack Welch, Tom, firmly behind us with this company now, it seems.
We'll have much more coverage on that, of course, with the value of Karen Ubelhart, our industrial expert at Bloomberg Intelligence. We'll speak to her in a bit, we hope. Amish Adalja with us right now, senior scholar with Johns Hopkins, on the pandemic, on COVID, and Amish, on the good news of, I think, 33 countries. We're opening borders. We're beginning to move around. Is there a risk at our airport of foreigners coming in? I had a big debate on this last night. Are we supposed to fear foreigners?
No, we shouldn't be fearing foreigners. I think that when it comes to infectious disease emergencies, travel bans have really never been successful. They end up creating stigma, and they give people a false sense of security and focus a lot of public health efforts where they shouldn't be. And our travel bans have not kept COVID-19 out of the United States, and many of us argued against them when they were started. So this is a very welcome change, and I think this is long in coming. And I think that we have the tools to be able to control COVID-19 with vaccines, with rapid tests. So this is nothing that people should fear. This is a good sign that we are starting to move into the post-pandemic world.
Where will we be the first of 2022?
We will probably be at a place where many more people will have been vaccinated, especially that 5 to 11 group in the children. That's going to become more normal. We're going to be at a place where we don't see many hospitals having crisis from COVID-19, but they'll still have COVID-19 cases in the hospital. There's going to be a baseline number of cases, hospitalizations, and deaths. We may have antiviral pills available to treat people as outpatients. That will be something that I think will be a really exciting development. And I think we'll be at a point where people understand that COVID-19 is with us, and we've got to learn how to adapt our behaviors to keep ourselves safe, but realize that if we're going to kind of have a life or do things somewhat similar to what we did before the pandemic, we're going to have to learn how to accept that risk. So I think that we probably will be in a much better place where a lot of harm...
Position closed, guys, as you can see, at 115.83.3. Okay, we made 1,000 pounds. Well done, guys. All of you who following my trades and who use our strategy, you made 1,000 pounds in profit. Okay, stay safe.
Adults early on in December when people had to go on 4 or 5 different websites and keep refreshing the screens trying to get appointments. And this is something that should have been anticipated because we knew there were about a third of parents that really were going to aggressively want to have their children vaccinated, and then they were all going to want it that day. And I think that this is something that could have been better planned. It should have been easier. It took some time for the big pharmacy chains to get rolling. I think they only started this weekend, and it is difficult. You have to really look around. I've had some of my friends call me for their children, and I kind of direct them to kind of rural places where there may not be as much of interest in the vaccine, but it's doable. But I think it is it's an unforced error that you could have actually predicted that this was going to happen. And the vaccine can't be reformulated. You have to have the smaller vials, the vials with the smaller doses and the smaller syringes. So they couldn't just take the adult dose, even though that's possible to do. But they're using specific pediatric vaccines. And it just takes some time. And again, it's a logistics problem that I think should have been anticipated.
Dr. Adolja, we already saw that a whole host of nurses and even doctors did not want to get vaccinated, creating a bit of a public relations nightmare for a number of different healthcare centers. What do your colleagues feel about getting their children vaccinated at a time when many people say we need to wait to see more studies, to see it put into effect to determine the potential widespread side effects?
That's certainly what a lot of people say, and I think that that's a false way to think about the vaccine, and it's not really accurate because we do have a lot of data on how well this vaccine works. And if you're an adult who yourself isn't vaccinated, it's highly unlikely that you're going to have your children vaccinated. And we saw that in the 12 to 17-year age group where the uptake isn't very high because there's more vaccine hesitancy with children than there is with adults. And I think it's just important to remember that we've seen with our own eyes how well this vaccine works. It's not something that's untested or untried. This vaccination program has been going on since December of 2020. Hundreds of millions of people have been vaccinated. We see what the benefits look like. And if you can prevent your child from having a vaccine preventable illness like COVID-19 with a safe and effective vaccine, why wouldn't you do it? We vaccinate for things like chickenpox or rotavirus, all of which have very mild mortality risks to children, but we do it because we don't want the children to get sick because we're trying to keep people healthy. We know that children are usually spared from severe consequences, but it's a very disruptive event, and we've got a great tool to be able to prevent them from even having to experience that. So why not do that? And I think that's the message that we have to try and get into parents' minds, and we also need to get that into adults' mind because we still don't have enough adults vaccinated.
Doctor, always good to get your thoughts on this programme, sir. Thank you. Dr. Amish Adalja there of Johns Hopkins. Wanted to wrap things up and get to GE quickly, just to get you a look on what's happening with this stock in the pre-market. Up more than 10% in the pre-market this morning, Lisa, up by 12% as I see it at the moment. Planning to form 3 global public companies focused on the growth sectors of aviation, healthcare, and energy, that company splitting into 3.
Do you remember the time when companies were becoming conglomerates and acquiring one another? It seems like, particularly in the industrial space, over the past few years, we've seen the opposite, the sort of breakup of some of these conglomerates, and frankly, the rewarding of that breakup in the equity markets. I wonder how long that can last and what that means in terms of just having focus on a specific business.
Tom, the stock, 121.69.
Yeah, just to give you an idea how they're thinking here, John, you've got aviation in the fund. the corporate company, the founding company will be GE Aviation. Out 3 years, I believe it is, you'll see power drift off. Power is their big headache. And then healthcare is interesting because that's Lawrence Culp's past. He, of course, founded Danaher. Full disclosure, some parts of the family have shares in Danaher. But John, it's amazing to me that Danaher's operating income is about twice the size of GE Healthcare. And you've got to ask the question, is Culp setting up GE Healthcare for a Danaher merger?
I thought you might, Tom, tell us you owned a stock just then.
No.
Just for
no,
a second.
Vet Bill has it. No, I'm triple leverage all cash.
This stock up by 12.27%. More coverage still to come on Bloomberg Radio and on Bloomberg TV. Tom Keene, Lisa Abramowitz and Jonathan Ferro. This is Bloomberg Surveillance.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I was just finishing what you were saying, Tom.
Thank
November
you.
3rd
You did
when the
your
decision is.
extend
Just in
this,
case
John,
people
please.
got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now.
Wrap it
into
up.
weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
There's something
bigger going on in the bond market than just the inflation story.
We are in the process of normalization, but it's just painfully slow.
Economists and market practitioners and portfolio managers really have a very different view of inflation.
Central banks are not getting bullied by the market or not getting bullied by inflation risk that seems to be persisting much longer than what anyone forecasted.
The Fed is your friend during this period.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Rinse and repeat, starting the day at all-time highs from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market up 1 on the S&P 500. TK into Tuesday. It's an 8-day winning streak.
Interesting in the equity markets, and John, I'm going to go to the shock of where we are in bonds. I don't think many people expected this. Can we say, John Farrow, that this morning we're on the edge of Steve Major? I'm sorry, this is a seismic shift towards a low-rate regime.
Yields in 3 basis points to 146 on 10s. Tom, on 30s, we come in a couple of basis points to about 186. The curve has been flatter over the last several months. But, Tom, there's a bigger conversation now on real yields, deeply negative through the curve.
30-year out to record, and I went back. I had the chart featured in the previous hour, 2 hours ago, I should say. John, there's a way that I can go back with the H15 series and look back 60 years, and I can't say we've never seen this, but the rarity of this back to the 1970s, it is singular.
Lisa, you've talked about how supportive this bond market story is of what is happening in this equity market over the last couple of weeks.
It goes to the TINA trade. What ends the TINA trade if you have a record low negative real yields when you go out to 30 years? And you do wonder whether this is the new paradigm, right? As George Saravelis was talking about, this idea of the savings glut. People got all this money that they saved in 2020. They put it in their bank accounts. The banks buy short-term debt. And look what we have. Yep. We have the scenario that we're looking at right now.
We've got to do a couple of things this morning, Lisa. We've got to talk about who's going to be leading the Federal Reserve beyond, say, early next year. Will it be Chairman Powell, or will we have a Chair Brainerd reportedly interviewing for the top job at the Fed, at the White House, by the President? We can talk about that later. And TK, we've got to talk about a single name. GE in the pre-market up by 13%. Tom, we've been talking about it for years. When Larry Culp came on board, we talked about it then. We asked the question, would it be broken up? GE splitting into 3.
And what's fascinating about this, John, at McKinsey, Bain, where Culp is an advisor, I believe, I'm sorry, every single MBA wonk this morning is saying, do we need to do what Culp has the courage and the inspiration to do this morning? You wonder, how far does this spread, a de-conglomeratization?
Or how late they are, Tom, to doing this. What about that?
Well, you could say late in terms of decades and decades of failure. Yeah, there's no question about that. But Culp has come in with a substantial stock and cash package, and he's delivering the goods on a plan that goes out 23. The headache of this breakup of 3 companies doesn't happen until 2024.
123 in the pre-market. The stock is up by about 13.5% now. Let's get to the broader price action on the S&P 500, up just a couple of points on the S&P, advancing 0.04%, a lift on the NASDAQ 100, up 26, advancing 0.16%. You want to do the Dow?
No, I did the Dow yesterday.
0.06%.
I did it all through the morning yesterday.
On your own? Just talking to yourself?
No, I do my own data checks at home.
Yields in 3 basis points. I can see that. 145.67 on 10s. Lisa, that's a nominal yield. You're focused on reals.
Yeah, I'm focused on real yields going to a record low, at least in the 30-year. I'm also focused on the image of Tom Keene giving a data brief to Vet Bill every hour on the hour at home. Here's what I'm looking at today. 8:30 a.m. I'm very much focused on input prices for factory makers, for manufacturers. The idea here that we've seen them absolutely surge past 8% year over year. Wow. U.S. producer prices. We're going to get a gauge of that, and this really speaks to the issues that we are seeing in the supply chain and just in general and some of the kinks in the labor market. Then at 9 a.m. we get a speech from Fed Chair Jay Powell. He's giving the opening remarks at a conference jointly hosted by the Federal Reserve, ECB, Bank of Canada. I find it fascinating that we talk about what the difference will be between a Fed Chair Jay Powell and a Fed Chair Lael Brainerd. The bond market seems to think Lael Brainerd will be much more dovish. Just the idea idea of her heading to the White House caused a move in the 2-year yields lower. At least that was the analysis by a bunch of strategists. I'm sure you'll have people out there saying there was something else completely unrelated that was causing those moves, but that is at least the narrative that seems to be percolating out there. And at 12 p.m., we get from the the EIA, they're releasing the short-term energy outlook for the United States. This is key in determining whether the White House is going to release some of the reserves from the Strategic Petroleum Reserves. How much can they really do on their own? Are they actually getting collaboration with other nations, potentially releasing similar reserves? I don't know, John, and I honestly wonder what the messaging is on the heels of COP26, that they are willing to do this in order to keep gas prices low so that people keep using as much as they've always used.
Did you ever think you'd pay that much attention to that report, as you would a little bit later today?
I mean, honestly, I saved Tom from having to do the 10-year auction. So I didn't do the 10-year auction today just for him because of the EIA release. So there you go, John.
Don't do that. How big's the 10-year auction later?
It's, I believe, $26 billion.
I know you've got them all stored upstairs, just ready to regurgitate and talk about. Lisa, thank you.
Anytime.
Your guide for the day ahead from the wonderful Lisa Abramowitz. Your guide for the Federal Reserve now with Luke Cower, Director of Investment Solutions at UBS Asset Management, and of course, formerly, once upon a time, do you remember, Tom? I always forget.
No, I don't.
Luke Cower's time, formerly of Bloomberg News.
Senior moment, I don't remember.
Luke Cower, good to have you with us, sir. Let's start with this one.
Oh, great to be here.
Before the dog weighs in on this as well.
Already.
Daylight between.
Would you tell?
I got a very
Luke, would you tell Mahavlich to keep it down?
I'll work with this one, Luke. We'll go with it. The daylight between Chairman Powell and Governor Brainerd. How big is it, Luke?
From a market perspective, I don't think it's that big. I don't think the possibility of having a Lael Brainerd versus a Jerome Powell is going to be that material. From a interest rate setting perspective, over the course of an economic cycle, I think both seem fairly committed to plumbing, to trying to discover the depths of what full employment could possibly be. But at the same time, both are going to be in a Fed that's institutionally geared to minimize upside spirals and inflation risk. And to a certain extent, you've got to think that both are going to use realized inflation data to tell you a lot about what actually a maximum employment actually is.
Luke, the gloom crew is in retreat. They look like the Montreal Canadiens' hockey season, to say the least. You set an optimistic construct at UBS, and you set an optimistic construct even if we get higher yields. How do you do that?
Well, yeah, this is actually something where I'll try and tweak Lisa's Tina. I don't think it's Tina. I think it's Tiaga. There is a good alternative right now, and that alternative is still equities. It's still a good case to be in equities, and particularly more cyclical areas of the market. If you think about what's happening, macroeconomically speaking, on the earnings side, we continue to have pretty historically outsized surprises to the upside. You're just starting to get U.S. economic data to surprise to the upside again, and on the flip side, you're having bonds. I would say by and large, you've had more surprises to the positive side on activity starting to filter through, sequential acceleration from Q3 to Q4, and at the same time, inflation generally surprising to the upside. I think that's a scenario where you blend out the two, and the equities actually make a very good alternative to bonds. And even in the face of rising yields, the reason why yields should rise, in our view, is due to the kind of endogenous strength we have ahead of us in a private sector recovery. For the past 10 plus years, every good growth upspurt we've had has essentially been a function of a one-off fiscal package somewhere in the world, or whether it's US or a big turn in the Chinese credit impulse. This time we're pushing the ball downhill because of the stock of fiscal we already have, and that gives us just a very strong runway for private sector activity deep into 2022.
A lot of people, Luke, say that the reason for some of the energy that we see, the momentum in the equity rally, has been the negative real yields. Do you understand why real yields are as negative as they are? Basically, why you are getting no money and you are actually giving back money on an inflation-adjusted basis to buy 30-year, 10-year, 5-year, and 2-year notes?
5-year, 2-year, yes. Longer out the curve, I'd be lying if I said I understood why real yields are, particularly as low as they are, much, much lower than they have been at kind of their relative to their, late March peak. There's a few theories you can espouse here. One is essentially that investors are overweighting the tails, and there are tail scenarios in which either growth disappoints or inflation really picks up, that you could see actually real yields move more negative. Okay, well, if that's the case, then why aren't those kind of tail scenarios more embedded in further out measures of inflation compensation? So the view I kind of default to is, hey, we've had a cycle now, we've been past one in which growth was kind of persistently very sluggish. We have a kind of 30-year plus cycle of just a grind lower in interest rates and in real yields. And I think investors are extrapolating that to a certain extent, thinking, well, we're going to have a lower peak Fed funds this time. That's just the way it goes. The burden of proof is on the expansion to prove that it is strong enough to withstand some tightening. And I think that might be what needs to happen before real yields can be really unlocked to the upside.
Lou, let's do the important stuff now. Ollie in or Ollie out? Which one, Luke? Got to make a call, buddy.
Got to make it. This is there is no alternative. This is that. Not financial markets. There's just what's out there. Who do we hire?
Is that the answer? Well, you let him go, didn't you? He went to Spurs. Should have gone with it.
Well, you can't play five at the back with that squad. Too much good offense up front. It's like can't stay hiding out in growth right now with all the cyclical strength we've got coming.
I like how you made this relevant to the market, Luke. That's nice. Luke Cower there of UBS on his beloved Manchester United at the end there, Tom. Who's going to be the next manager if Ollie has to go?
Well, does it go this week? I mean, do they do it as quickly as the Tots
They're on an international break, and it looks like the manager's taking a break himself.
Have you ever seen it like this? I mean, I'm sorry, folks. I pretend, but I'm not really up to speed. But Newcastle, the Tots, somebody else I saw, I can't remember, John. Have you ever seen it like this?
Happens now and again. Yeah, it happens now and again. Manchester United have just never been able to replace Sir Alex Ferguson, Tom.
Loved West Ham Liverpool. I don't watch this garbage.
Game?
And was it a proper game?
That was just beautiful to see.
I was just blown away by that.
Price is thrilled.
Yeah.
He's so happy. Steve Major too. Both West Ham fans. Equity futures this morning up 2 on the S&P 500. We're basically unchanged, up 0.04%. Yields in 3 basis points, 145.84. Heard on radio, seen on TV. This is Bloomberg Surveillance.
With the first Fed news, I'm Rishka Gupta. Once mighty American conglomerate is breaking up. General Electric will split into 3 companies focused on healthcare, power, and aviation. It's the most sweeping and significant changes for GE since Larry Culp became CEO back in 2018. The healthcare division will be the first to be spun off in early 2023. Bloomberg's learned that President Biden has interviewed Fed Reserve Governor Lael Brainard for the top job at the central bank. That took place when Brainard visited the White House last week. It's a sign that Fed Chair Jerome Powell has a serious rival. His current term ends in February. SpaceX has returned 4 astronauts from the International Space Station. NASA's Crew 2 mission splashed down off the coast of Pensacola, Florida, late Monday, completing 199 days in space. The space agency was forced to alter its cruise launch and landing schedule due to disruptive weather over the past 2 weeks. And in Nicaragua, President Daniel Ortega has won a 4th consecutive term after jailing his most popular opponents. Both the US and European Parliament called the election a farce. President Biden is pledging to use diplomacy to hold Ortega accountable for abuses. And electric truck maker Rivian Automotive prices its IPO today. It hopes to raise as much as $10 billion in a listing that could value the company at more than $70 billion. If the shares are sold at the top of the marketed range, it would be the 7th largest US IPO on record. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
here and click on it, we make money. But now there's a big difference compared to other search engines. We use the money to plant trees all over the world where they are needed most.
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The outlooks for inflation and unemployment I summarized a moment ago turn out to be the actual outcomes, then I do believe that these three conditions for raising the target range for the funds rate will have been met by year-end 2022.
Vice Chair Richard Clarida of the Federal Reserve, but for how long? It's been tremendous, absolutely fantastic, Tom. Guiding Fed policy alongside Chairman Powell over the last several years, and not even discussed at the moment for what happens to him, Tom, next year.
John, this is a really important point, and what's amazing is the credit out of the pandemic, whatever anybody thinks, is so different than the navel-gazing of 08, 09, and 10. I mean, it's completely different than the analysis, the scrutiny, if you will, out of the financial crisis.
Yeah, and at times when Chairman Powell hasn't exactly given fantastic communication, we've all sat there waiting, Lisa, to hear from Vice Chair Clarida.
But
yeah, go ahead, Tom.
No, please.
Well, what I was going to say is that we've gotten used to the big three having control over the Federal Reserve. Now that President Biden can really name new leadership, is there a top three that will have the same kind of control, John, or will there be more uncertainty around Fed policy than there has been when it's been led by the top a little bit more?
The truth is it takes time. We saw this at the ECB. We had President Mario Draghi with Benoit Cœuré. We had Peter Pratt alongside him. So it was the head of markets, the head of the economy, the chief economist, and then the leader of the ECB. And when they stepped away, it was always going to be difficult for President Lagarde to come in, bring on the likes of Philip Lane as the chief economist and start that effort all over again. Tom, it's difficult to rejig things at the top all at once.
I was going to say that Powell's dramatically improved his communication. John, you lived it. Did Draghi improve his communication?
As things went along? Yeah. Without a doubt, and they all do. They all do, but it takes time. And the reason you don't want these things to happen at inflection points with policy is precisely because it takes time to get your communication together. And it took time for President Lagarde as well. Remember, she took on that job and that crisis hit pretty soon after. Want to hit the price action quickly.
Please,
Equity futures
please.
unchanged on the S&P. 8-day winning streak into Tuesday. A nice lift in this equity market. All-time high, record high after record high. Yield in a couple of basis points on 10s to 146.36. And your mover of the morning, it's GE, General Electric. The word from Larry Culp today is a defining moment for GE, and we are ready. That company splits into three. That stock, Tom, off the highs of this morning, 115.90 now. We're up by about 7%.
We'll talk about this later. Lots to talk there. The history and the path forward for General Electric. Right now in the path forward for the Federal Reserve System, front and center, Anne-Marie Horton joins us on the politics of this decision, our Washington correspondent. Anne-Marie, it is Powell, it is Brainard. We all understand they're different. And I guess they're different after the election. Let's go to the wokeness of the moment, clearly in support of Brainard as the new chairman. Focus on the politics here at the White House that changed the first Tuesday of November.
Well, what changed in the first Tuesday of November, Tom, is the fact that this Democratic Party is realizing that potentially their rhetoric is moving too far to the left. The fact that you said the wokeness, James Carville had said that what happened on Tuesday was the fact that the party is too quote unquote woke. And it's just the rhetoric that's not matching what the electorate wants to hear. And when you have someone like Governor Brainard, potentially monetary policy wise, very much similar, as Luke Kawa was saying, to Chair Powell, but she would be a certain nod to the progressives, especially those like Elizabeth Warren.
I want to know why she's a nod. I want to know why the economists from Wesleyan and Harvard teaching at MIT is a quote-unquote nod to the woke.
Well, she is certainly a lot tougher on banking regulation. And that is something that you have the likes of Elizabeth Warren, a senator, of course, recently calling Jay Powell and what he's done with banking regulation, what in her mind, saying he's a quote unquote dangerous man. But I think there's something missing in the conversation this morning. This summer, we reported that Treasury Secretary Janet Yellen backs the reappointment of Powell. Will President Biden go against the own advice of his own Treasury Secretary? Or is this just all a show and game? We also reported that she was up, of course, for the supervisory position. So potentially you could see Powell being reappointed, her going to the supervisory position. But certainly he is meeting with her. And in this interview, our reporting, for the top job, and that is certainly a nod for the progressives.
Looking forward to the next week or two, we're definitely still focused in Washington, D.C., also on the bipartisan infrastructure plan that was just passed. How much are people talking about where we will get the people, the labor, to accomplish some of these programs, given the shortages that we've seen pretty widespread across corporations?
Yeah, it's a tight labor market. The participation rate right now is not up where it was pre-pandemic levels. I got to say, Lisa, though, that is not the topic of conversation amongst the political circles in Washington. They are trying to make sure they transform Friday's win into an actual win. We spoke about yesterday how some of the progressives actually poured some cold water on it. This should have been a huge win. And some people in the Democratic Party are treating it like it wasn't this huge victory, that they did something the prior administration could not do. So we're going to see the president really tout that. Already last night, he joined Local 12 in Cincinnati, talking about the billions of dollars that will go to Ohio, and then finally fixing that Brent Bridge that he's called numerous times, and so many presidents have promised to fix, that wasn't able to be done. So they're going to focus on that at the same time, of course, trying to get on the same page to pass that reconciliation package, which is going to be a huge undertaking. There's a number of things Congress needs to get done before the end of the year, and time's really running out.
Is the Democratic Party getting more cohesive as they feel the pressure from what happened on November 3rd, or is this November 4th, or is this the same party that was splintered earlier in the year?
Same party. I think what you saw Friday evening come down to the wire in terms of having the votes to try to get across the finish line, the hard infrastructure, with the president himself putting out a statement saying, when these votes come up, please vote yes. This was after they lost Virginia in a close, tight race in New Jersey, and you still saw the division amongst the party. I think it's going to get very difficult to pass this legislation, which of course will
only have to have Democrat votes.
Anne-Marie, always good to catch up. MH down in D.C., our Washington correspondent on the latest in D.C. And Tom, we discussed this in the previous hour. It's on the radar, top of mind for us. Who's the next Fed chair? Of course it is. I just don't know how big this is playing down in Washington. And Joe Matthew indicated it's not really.
Yes, I agree with that. I do agree with that, John. I actually went back and looked at some of the newspaper reports of the Greenspan redo by Bush Sr. And it was the same idea. It's a big debate for a select group, no question about it.
Do you remember when they floated the Larry Summers nomination in the Obama years, Tom? Do you remember that? And it got shut down pretty quickly.
Yeah, well, that was, these are called trial balloons.
And that's what happens.
That's what
we seem to be playing that game again.
I take immense issue with the politicization of Lael Brainerd. She is a first-class academic at an extremely young age in applied economics. She did tangible work at MIT. Let me tell you, John, MIT is just loaded with talent, and she stood out there.
Tom, she's fantastic, phenomenal, and no one would disagree with you.
If she was a guy, would we be having this debate?
She helped set up the framework for the Federal Reserve. Tom, I think we would be. She made a donation to a political campaign of Hillary Clinton. Bottom line.
She's a citizen,
not great judgment,
right?
Tom.
Well,
Tom, she's on the Federal Reserve, a sitting Fed governor,
fair.
making a political donation. Gender's got nothing to do with it.
Made a donation.
From New York, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Away from the opening bell in New York City this morning. Good morning to you all. 8-day winning streak on the S&P 500, looking to grind out a 9th on the S&P, the longest daily winning streak of the year so far. Equity futures this morning up a single point, advancing 0.02%, call it 0.03% on the S&P. That's the equity story. Here's the bond market picture. 2s, 10s and 30s. Your 10-year yield comes in 2 or 3 basis points to about 146.36 on 30s right now, just north of 186, down about 2 basis points. And Lisa, that's just the nominal story. Walk me through reals, because real yields at a very, very long end of the curve are coming all the way down.
Take a look at 30-year real yields. They're now at negative 0.53%. That is a record for this. What makes this make sense to anybody? The idea that going out, you are getting a negative yield of 0.5 percentage point for 30 years based on where inflation expectations are right now.
Do you know what Mike Collins of PGIM said last week to me, Tom? He said, if you're going into the risk-free asset, you do not deserve a positive real yield. Not in this world. The world has changed. If you go into the risk-free asset, you do not deserve a positive real yield. The words of Mike Collins of PGIM. That's the story in the bond market. Switch up the board and finish on this. I've talked about it a little bit this morning already. I want to talk about it again. This is happening even as economic indicators start to surprise to the upside. So if you look at the surprise index of, say, Citi, we have one here too at Bloomberg. Tom, that's just started to inflect positive on the Citi Economic Surprise Index. The data is getting better than expected, and we saw that with payrolls last Friday.
John, it's the ebb and flow here of what we see of the two, the haves and the have-nots. I'm sorry, the partition right now into 2022 is extraordinary. A lot of people are loving this, and a lot of people are really struggling.
Do you think we deserve a positive real yield on the risk-free asset, Tom?
We are so far from a positive real yield, that's not a debate. We need to show some form of calculus to turn it around. That is unproven.
Mike Collins thinks we don't. Lisa, I think that's really interesting.
I think that's fascinating, especially at a time when you've got such a high savings rate. So what does that mean, not only for money market funds, but also in terms of why is that not pushing people to spend more of their money?
An interesting point. We've even had negative nominal yields.
Right.
Over
in Europe.
In Europe, and that dynamic, has that changed much? Are people going out there and spending in a big way?
No.
Are they doubling down on saving? Does it have those effects that maybe you're not looking for? The unintended consequences of very, very low interest rates?
The answer is yes, if anyone was wondering. It was a rhetorical question.
No, we're just having a conversation back and forth. Are we still live? I think we are. Okay, that's the cross-asset price section. Let's get you some movers this morning. Let's get to Romain Bostic. Good morning to Romain.
Hey, good morning, John. All the talk today, of course, is going to be about General Electric. Those shares higher by about 8% here in the pre-market. General Electric, aviation, healthcare, and now, of course, energy and power unit, all going to be spun off into 3 separate companies. Of course, no company over the past several decades has been emblematic of corporate conglomerates than General Electric, a conglomerate no more. But of course, we know that the writing really has been on the wall for quite some time. You go all the way back to the 70s, and it's just sort of the organizational rigor that Reginald Jones brought to that model, and of course, the financial wizardry that Jack Welch brought to that model as well. But that house of cards really came crashing down a few decades ago, right after the turn of the century. Of course, the financial crisis accelerated that, and now, ever since Larry Culp has taken over the helm back in 2018, it's all been how do you streamline a company this size, selling off assets, consolidating others, and now the decision announced this morning to spin off these businesses into 3 separate units here. Investors seem to like that. This seems to be what they've been asking for, and this is a pretty gutsy call here by Larry Culp. A lot of people would make the argument here that the conglomerate model itself isn't necessarily dead. Maybe you keep this together. Maybe there's still some success to be had out of that model. You see it overseas in Tata Group. There's some argument to say you still see it here in the United States with companies like Amazon, where some would argue that's just basically sort of a modern-day version of that old industrial conglomerate. Nevertheless, this is going to be the stock of the day. no matter where it ends up here, is definitely going to be the corporate story of the day. Flip of the board real quick, just a couple other quick movers to keep an eye on. Luminar Technologies has a great deal here with NVIDIA. The shares up 47%. They're going to be providing those autonomous sensors for NVIDIA, which at some point, presumably, are going to make their way into a lot of cars. Smile Direct Club down 23% on a huge drop-off in sales. And in fact, their guidance here for the fourth quarter is about 30%. The high end of that guidance is about 30% below street consensus. And Roblox had earnings last night. They beat handily here. Bookings well above what the street was looking for, Tom.
Romain, thank you so much. Greatly appreciated. Right now on What Matters, and boy, the feedback we've had on the show shows what it really does matter. Take $120 a barrel oil and do the math on what that means for a gallon of gas, and you get out to $4.77 a gallon, and maybe you migrate out to $5 a gallon. Francisco Blanch joins us with our interview of the day on your future inflation. Francisco, I want to focus on supply rigidities. Why do we have supply rigidities around our increasing oil demand?
Hey, Tom, thanks for having me. I think there are two main reasons. The past and the future, right? If you look at the past, we've had terrible returns in the energy sector. It's been by far the worst performing sector across the S&P 500 in the last 6 or 7 years. So investors are really tired of throwing good money after bad money. And then if you look at the future, that's the other part of the rigidity is the uncertainty around the demand path for global oil and gas. I think a lot of companies really face this dilemma from their current investors, from management teams, and frankly from policymakers. Where is oil demand going? We just don't know how fast the energy transition is going to happen, and that in itself is a big hurdle to bring money back into the sector. We also don't know what the policy is going to look like in the next year, 2 years, 5 years. So again, the past and the future make it a very, very inelastic supply curve right now.
We have heard a lot recently, Francisco Blanch, from politicians whose fallback is they study one global price. You are a true student of this. Should nations craft policy on hydrocarbons, or for that matter, commodities, based on one global price?
Well, the answer is no. I mean, prices for energy are local in many instances. That is certainly true for most electricity markets. It is also partially true for natural gas. In the case of oil, it's less true. Oil is more of a global market. And then, of course, in the case of coal, there's also a lot of local markets. So it really depends where you're looking at. But each country and region faces different pricing on energy for the most part. So there is a global price, which is crude oil, the price of Brent, that sets the benchmark. But then there's a lot of local issues.
On the global benchmark crude, Brent crude, you were talking about $120 a barrel. Right. This is your new price target going into the end of the first half of next year. What gets us there, given the fact that you're already hearing nations talking about releasing strategic petroleum reserves in order to bring down the price of gas?
Look, I think releasing the SPR while at the same time you're printing a lot of money and giving it to people is a pretty bad idea. I mean, maybe you should start cutting back on stimulus before you start opening up the taps of your strategic reserve, which is really there to cope with emergencies. I mean, is it an emergency that we have a booming demand for oil, that we're coming back from COVID? Not really an emergency. I mean, I think you have to let the market do its work, and prices are signals that work through the demand equation and slow down consumption as they should, rather than throwing SPR oil on them. I think what's the reason we upped our forecast from 100 to 120 for the first half of next year is the global gas crisis we're facing. Again, not something that the U.S. is necessarily very exposed to because of all the domestic natural gas that you have in the U.S., but it's something that Europe and Asia have become very exposed to, and certainly the electricity markets in both regions have become very exposed to this upward demand shift. And again, so it's gas to oil consumption is a big return of travel. Today, or actually yesterday, was the first day that the U.S. allowed international vaccinated travelers to come into the country. That's going to lead to a booming air travel window here for the next 6 months, and presumably you're going to have Asia coming back in the third quarter of next year as vaccines roll out there.
Francisco, you said something I want to get a little bit more elaboration on, that perhaps the U.S. Biden administration should pare back stimulus before releasing the SPR. Are you implying that you think that the stimulus is behind the demand for oil that has led to this, the increase in prices that we've seen?
Well, I mean, I think that's pretty straightforward. The answer is yes. I mean, stimulus has been behind the impulse we've seen to global demand. Global exports, by the way, are up almost 30% over the pre-COVID levels. This has created a huge surge in Chinese energy consumption. I mean, Chinese energy thermal fuel demand is up 11% year on year, mostly because of the surge you've had in domestic consumption there and factories and what have you. So we are stimulating the economy. We want to have the jobs back. And ultimately, I think one debate that we need to have is today, economic growth is very closely linked to energy consumption. So if we want to have a different kind of economy, we want to have low hydrocarbon prices and a green economy and strong growth. I mean, we got to have better policies. And I think that's one area of discussion that, frankly, I don't hear enough about. How are we going to coordinate all those?
Francisco, we have very little time left with you. Before you run, I just want to get something on the tape for you to reiterate. This $100 crude call, from what you've seen over the last month or so since we last spoke to you, more or less likely, just in terms of what you're seeing?
More or less likely, that's what we opted. And again, I think there's going to be a competition between gasoline and diesel in the first half of next year. That's why we are bullish, because we think that there's not only supply side rigidities, but also demand side rigidities. Gasoline, diesel, jet fuel demand is all coming back, and these are biggest laggards of COVID. Every other commodity has spiked. Oil, remember, at $85 a barrel, $4 a barrel Brent, has been the laggard, not the leader of the commodity complex.
Francisco, thank you for that, sir. Appreciate it. Francisco Blanch there of Bank of America. A nuanced view at the end there. Just important to get our head around, Tom, going forward from here on this call for triple-digit crude.
$5 a gallon gas, what does it mean for the country, John? That's all it comes down to.
What does it mean politically?
Yeah, huge.
Even if they can't do much about it.
Deal.
8 a.m. hour. In the next hour, we'll catch up with the Marriott CEO. Looking forward to that on travel worldwide. Your equity market just slightly negative after an 8-day winning streak on the S&P. Heard on radio, seen on TV. This is Bloomberg.
With the first word news, I'm Rishka Gupta. The giant General Electric, built by Jack Welch and his predecessors, will no longer exist. GE says it will split into 3 companies focused on healthcare, power, and aviation. Healthcare will be spun off in 2023. Renewable energy, power and equipment, and digital businesses will be combined into a separate unit that will be spun off in 2024. The remaining company will be GE's airplane engine operation. A warning from the Federal Reserve. The central bank says that prices of risky assets keep rising, and that makes them more susceptible to plunges if the economy takes a turn for the worse. The Fed cited stable coins as an emerging threat. It also said that fragility in China's commercial real estate sector could spread over into the U.S. Meanwhile, in China, prices that companies charge for their output probably rose at the fastest rate in more than 2 decades last month. The producer price index is forecast to have risen 12.3% in the last year. The big reasons: the continued commodity boom and an energy crunch. And Southwest Gas has rejected an unsolicited takeover offer from billionaire Kyle Icahn. The company says the all-cash offer for $75 a share undervalues it and is not in the best interest of shareholders. Icahn revealed last month he holds a 4.9% stake in Southwest Gas. And it's a sign that Nissan is still on track to climb out of the red this year. The car maker raised its annual operating profit outlook. That's despite parts shortages that have hammered production. Resilient demand for cars and a weaker yen are boosting profits for some Japanese automakers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference, this week on Bloomberg Television and Radio.
How much stress is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's as simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked of other things. Now that's moving to become mandatory.
So do you enjoy being a senator with all this pressure on you? Is this fun, or is it not that much fun?
My dad always said, if you can say no with a tear in your eye, you might be okay. And I've been crying a lot lately.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
India is sort of on the takeoff stage now. India is where maybe China was 10 years ago. So it's got a long way to go, and it's going to be a long run. Of course, there are going to be corrections along the way, so you have to be aware of that. But otherwise, India is really on a run. It's going to do very, very well.
Mark Mobius there on emerging markets, as always, on India specifically. From New York City this morning, good morning, Tom Keene, Lisa Abramowitz and Jonathan Ferro. Your equity market's shaping up as follows. We're down 6, we're negative 1/10% after an 8-day winning streak on the S&P. It's been a while since we've seen some red on the screen. The S&P 500 just a little bit softer. Yields come in 3 basis points. The race for the Fed is on, waiting to hear something from the White House at some point in the near term. 146.19 on 10s, and your pre-market mover of this morning, and maybe, you know what, of the week, General Electric, GE splitting into 3, healthcare, power, and aviation. The years of Jack Welch well behind us now. This stock is up by more than 7% in the pre-market, Tom, 116.10.
A primer now, and without question, our global Wall Street interview of the day. Joel Levington joins us, Director of Credit Research for Bloomberg Intelligence. And folks, this is different than the rah-rah of the stock market equity sell side. This is about really looking acutely at what any given industrial company is doing. Joel Levington is expert. When you split off 3 companies, even over a timeline, the PR, the spin, and all that, who gets the liabilities? Who's going to grandfather the headaches here?
Yeah, they're all going to get some of the liabilities, Tom. And my guess is if they follow the Tyco playbook, which seems to be what they're doing in terms of the spinoff, what you'll wind up having is the new companies, the energy company and the healthcare company, will issue debt back and use the proceeds back to the parent to pay down some of the liabilities. But the aerospace company, at the end of the day, will wind up with the majority of the liabilities because it's the company that can handle the most liabilities.
You wrote 15 days ago, or maybe it was 20 days ago, about the idea of a piece of this train wreck being junk junior subordinated paper. This is on the aircraft leasing, and I get it's a small part of it, but I think a lot of our viewers and listeners would be surprised that an adult like you is writing about junior subordinated garbage.
Well, that's true, but GE, part of its capital business, has a junior preferred debt that is a crossover credit. Meaning that it is junk on one side from the raters and investment grade. That is likely to remain investment grade in the future.
Joel, going forward, this will be a tale of many different bonds, I'm sure, as we parse out what the capital structure of the new entities are. I am wondering, though, from a larger perspective, whether the deconglomerarization that we saw over the past 3 years has shifted in light of what happened with the pandemic, the idea that size actually helped with respect to shoring up supply chains and other types of resources.
Well, Lisa, you're totally on point, and size definitely matters, but it's also the kind of size that you have. Here, when you have so diversified businesses where you really can't leverage the technologies to a great extent, it's not the same as, let's say, a Roper Technologies, where it's a software-based platform across different verticals. So here, I think it's clearly a case for making it into 3 unique companies. I would also say it makes my eyes move towards an Emerson Electric or a 3M, where you might not have the same kind of consistency in their portfolios, and maybe those are portfolios that might be next to see breakups.
So, Joel, do you think that the reaction that we're seeing both in equities and, frankly, even in bonds to the split up of GE will actually encourage some of the separations, whether it's 3M or Emerson?
Without a doubt. I think people like having straight, plain vanilla stories with a growth outlook that they can understand. It's never really great in a diversified conglomerate because in that case, there's always some companies that are doing well and other companies that aren't doing as well. So I think you will see more breakups happen in the future.
How does Amazon 20 or 30 years out with their different businesses not become what you just described?
Well, I guess that'll become an issue once Amazon's PE is S&P 500 level, right? Same thing with Tesla, right? Tesla has a variety of different businesses inside of it, but I think when the markets are hot for your stock, it doesn't really make a difference.
It protects you.
Yes,
the market
exactly.
exuberance, and I'm going to stay on Amazon, is a real company, and some people would say Tesla's not a real company. But on something like Amazon, which is like Jack Welch pre-Immelt right now, how do they avoid, in your debt expertise, to run into the challenges that we saw with GE?
The market is always about growth, and as long as you have growth, you'll be okay. It's one.
So this is a story about they got buried because of growth at all costs.
They did, and that's really what happened, right? Because you had during the Immelt days and the Jack Welch days, the buildup of the capital business, which became too risky, too levered, and with lower quality assets, and that's really where the problems started.
When it comes to the big industrials, Joel, just sort of to wrap this all together, have you rethought the breakup of any companies, the potential breakup, I should say, as a result of what we have seen with supply chain issues, what we have seen with respect to pricing power when it comes to the bigger companies?
I really haven't, Lisa, but what I would say is that there are a lot of diversified industrials out there where I think you have to question, do the businesses make sense together? To me, something like Emerson Electric does not belong together, where you have a Home Depot type business where you're selling home consumer goods, as well as a automated business where you're dealing with petrochemical companies. It doesn't really come together. I think Stanley Black & Decker is another situation. 3M, I think, also gets put into question. And I think their shareholders and bondholders need to take notice because, as you can see with GE, it's going to work out pretty well for them today in terms of how people are going to think about them as a streamlined entity.
Joe, before you run, can we talk about how wrong we all were on Tesla credit? I just want to bring that up quickly. We haven't spoken for a while. What a run.
It's been
not just the equity.
It's been massive, and it certainly has played out well. They are following many of their EV peers in getting rid of all the debt on their balance sheet. They just have a little bit left. And right now, if you look at their CDS on Tesla, it's trading inside of companies like Stellantis, which is a BBB- credit. So the corporate credit market has gone from thinking of it as almost dying about 3.5 years ago to being worthy of investment grade quality.
John, can you imagine Joel Levington and Lisa Abramowitz at a bar having a conversation?
They're talking about high yield credit, Tom.
It'd just be
We would just bring the place
scintillating.
down to its knees with happiness
It would
and
be
joy.
a pretty sad bar at
Optimism.
times, I imagine, when Lisa walks in and everyone goes, I'll have another one.
Oh, you paint such a flattering image of me.
Make that a double. Make that a double.
Can we talk the 7-year auction?
Joel, thank you. Joel Levington.
Hey, wow, low blow, Tom.
Tens today, TK.
Tens.
Tens.
It's
Tens.
$39 billion of tens, $25 billion of 30 years tomorrow.
John,
Just letting
Romaine
you know.
brought this up.
Anytime.
I'm sorry, the reach here of Reginald Jones, who got all this started, and this goes back to my youth in a company called Ling Temco Vote, LTV. And I'm sorry, John, conglomerates just don't work. I mean, what can I say? There's just, I think this Amazon question's serious.
Well, hold on a second, Tom. That was the view 3 years ago. And then suddenly at the end of last year, people were saying, well, actually, maybe some of these conglomerates make sense if they do have pricing power. The key is, as Joel was saying, what's the synergy? I hate that word. I know you do too.
This is breaking news. We got it. John, I'm sorry. Peloton introduces strength training TV device with camera.
Nice.
Quick.
I think it's fair to say industrial conglomerates don't work.
Yeah.
Maybe.
Yeah, I think
specific
that
about
might be. Yeah, but I think being more specific is important here.
As always, futures in 4 on the S&P.
20 years when we're doing this.
This is Bloomberg.